For an IMEX company, cash flow isn't only about when your client pays you, it's also about whether every shipment is paying a tariff it doesn't actually owe. USMCA preferential treatment can mean the difference between zero duty and full MFN rates. And now that the agreement is under annual review instead of a locked-in extension, protecting that status is worth more attention than ever. Before fixing anything, it helps to know where liquidity gets tied up. 4 common spots: paying full duty on goods that would actually qualify for USMCA preference, paying VAT upfront on temporary imports, facing a retroactive duty bill if a preference claim gets denied after the fact, and letting small errors in your bill of materials quietly break your regional value content math. The first lever is making sure you're capturing every benefit you already qualify for. USMCA preferential treatment eliminates duty on qualifying goods altogether. Stack that with VAT and IEPS certification under Annex 24 and Annex 30, which lets you avoid paying VAT on temporary imports instead of waiting months for a refund. And for many operations, this pair frees up more working capital than any single financing tool would. Second, accurate bill of materials and Annex 24 inventory control protect that duty savings. Your regional value content calculation is only as reliable as your BOM. Get it wrong, and you risk a retroactive duty assessment, an unplanned cash outflow that can land months after the shipment already left. Third, build a rolling 13-week cash flow forecast and keep your origin documentation audit ready at all times. A robust cash flow forecast also provides the foundation for implementing hedging strategies to mitigate the impact of exchange rate fluctuations on cash flows. If a verification request comes in, having your file in order means it gets resolved quickly, instead of leaving your preferential treatment and your cash flow in limbo. Fourth, when there's still a gap, trade finance tools like factoring or IMEX-specific credit lines can bridge it, used as a planned tool, not a response to a surprise duty bill. If you want to know which of these levers applies to your operation, talk to your Prudenza advisor. Prudenza Academy, built for strategic execution.